Hi, my name is Angus Ho with Daddy Dad, a part of the Ash Management Group. I want to show how you can budget as a full-time engineer, make real estate investments, and live an exceptional family life as a dad. So, come along with me in this journey of wealth. The GameStop's sudden rise in value is a surprise to many investors as to what is going on. It is now known as the short squeeze. And in this video, I want to tell you how it works. Before I begin though, I want to let you know that I'm not a financial advisor and anything that I say is for educational purposes. Therefore, please do your own research and seek professional financial advice before making any investments. With that being said, if you're interested in this topic, please keep watching, and if you liked everything that I've said in this video, please smash that like button because it is just waiting to be pushed. A little bit about GameStop. It is one of the most well-known video game consumer electronics retailer. Before the days of the iPhone, many of the games we played were on discs, and this made GameStop a great place to go when I was a kid to buy games and videos. In Canada, it was EB Games, which eventually got bought by GameStop in 2005 for $1.44 billion. Life back in the day, before the speed of the internet picked up and people started downloading their games, was simpler. I still remember the days of Movie Gallery and Blockbuster, as slowly, one video store at a time, they would disappear. I still remember the days that I rushed the store to see what good movies they had for rent and for sale when they were about to close out. How about HMV? These guys haven't went bankrupt yet, but HMV Canada went into receivership and was bought by Sunrise Records. The days of the disc is slowly being replaced by the days of the download. Now, to understand the short squeeze a little bit better, let me take you back on the financial history of GameStop. That's because a short squeeze is all about the share cost of the company is believed to go down. To understand why, it's obvious that many gamers prefer to download their game over Steam instead of going to the store. It's so convenient and way easier. The decline of GameStop really started in 2016. GameStop reported a 16.4% drop in sales for the 2016 holiday season. Then, in 2018, GameStop confirms talk of a possible sale with Sycamore Partners, but wasn't able to reach a deal. With this bad news, shares of GameStop dropped to an all-time 14-year low. The financial results for 2018 showed the biggest loss in GameStop company. This was also the year that GameStop had many management changes. Paul Raines, the current CEO in 2018, who soon died due to health reasons, was stepped in by DiMatteo as interim CEO. Later, Michael Mahler became CEO, but shortly thereafter resigned as CEO due to personal reasons, and Shane Kim became interim CEO. Kim was replaced by George Sherman in March 2019. This caused a lot of disruption, and GameStop continually had to cut back salaries, lay off workers, and even close down stores. It would explain why GameStop kept losing value and its share price was as low as $4 per share. However, one crazy person or genius, whichever way you want to look at it, named He That Should Not Be Named. He That Should Not Be Named kept posting every month on the Wall Street Bets subreddit on what his position is with GameStop, almost bragging about it like a crazy person. He was even asked what his exit strategy was, in which he responded, maybe rhetorically, what's an exit strategy? Then later, he was asked, maybe you should use that $1.1 million to buy more shares of GameStop. Well, at his peak of this short squeeze, his $800,000 investment was worth $33 million. Unfortunately, as of January 28th, he's still holding his position and is now worth $18 million. I'm sure he can't sell all his stocks now and cash out, especially that banks have a trading halt, specifically Webull and Robinhood. Anyways, from a millionaire to a 10 millionaire, I would say he's a genius for pushing this idea of short squeezing. Therefore, he that should not be named is a crazy genius. I mentioned this word short squeezing a lot. So, what is it and how does it work? Normal investors purchase stocks in hopes that the value of the company would go up. Traditional investors can only make money when a company does well. Therefore, hedge fund managers created an idea of short selling, where now they can make money in both directions, up and down, even when companies are not performing. Thus, the idea of short selling a stock is born. Short selling is asking for a brokerage firm like Charles Schwab, Vanguard, or TD Ameritrade to loan you a stock. This loan will be charged at a margin account interest rate, which you can find easily online. The intent of this loan is to immediately sell it to the stock market. So let's say I'm the investor and I borrow one share of GameStop at $10 per share. I then sell it to the stock market at $10 per share. Now, what I really want is the share price to go down because then I can buy that share back at a lower cost. So I receive $10 for selling the GME, then I buy it back at $5, for example. This would give me a gain of $5. Then I have to give the 4% interest to the lender or the bank, which is like 20 cents per share. Not too shabby of a profit. Theoretically, this is how short selling in an ideal world would work. However, Redditors noticed how shorted GameStop was and decided to ban up to the big institutions. The Redditors bought up on the GameStop supply of stocks such that when the open contracts of GameStop was due, there was a shortage of stocks to buy from. So now the Redditors can hold on to the share while demand for this stock is increasing. This is why the price of GameStop exploded. Now, of course, we'll never know how many open contracts are left, or we'll never know when these Redditors will want to sell. So tomorrow, the price of GameStop could plummet, or it could keep skyrocketing. It's a high-risk game, placing bets on the roulette table. Either way, this crazy genius, he that should not be named, has started this crazy news storm, media frenzy, and made this short squeeze an everyday household term. The next thing I wondered, now that we know who owns the shares, which are the Redditors, who are the borrowers? Well, this person is none other than Melvin Capital. Melvin Capital is an American investment management firm which reported that it has $12.5 billion in assets under management. Currently, Melvin Capital has reported to have lost nearly $3 billion. That's not a great bet on GameStop. The US government currently has said nothing on regulation and did not make any comments about the situation.
I don't want to comment on a particular company or day's market activity or things like that. It's just not really something that I would typically comment on.
For now, it's worth watching and monitoring the situation. That's how it works, and I hope you learn just as much as I did on what a short squeeze is. If you have any questions about the short squeeze, make sure you join me in the Daddy Debt Facebook group. You can also ask the YouTube community any questions you might have on this topic in the comment section down below. If you would like to hear more budgeting, engineering, or real estate tips, please leave a comment down below on what you want to hear. Smash that like button, subscribe button, and be sure to hit that notification bell so you'll be the first to know when I post new videos every week on Mondays and Thursdays. From the Ash Management Group, this is Daddy Debt, saving you money.